Welcome back to another video, and thank you for clicking XRP buyback tactic exposed. You guys have to let me know what you think about this. And I want to lead with this. The XRP chart is showing a massive breakout in the future. We are repeating a falling wedge on the monthly chart. Last time this happened, we exploded by 90,000%. This time the falling edge is much bigger. Guys, in technical analysis, when you look at price charts, the longer the time period, the better precision, the more accurate these calls are. We are looking at the 1 month chart. Each one of these candles, these rectangles on the chart is a month. So this is significant. If you look at the price chart of XRP, if I pull that up really quick, you'll see there's a 500-day downtrend. Take a guess what's happening to that. It's being broken. If you look at XRP, press auto on the daily chart right here, 500 days downtrend. It rejected here in November 21, rejected here. And then the recent lawsuit news, the past 30 days have been something special. It broke out. And then what did it do? It perfectly came back to the line. This is what you want to see. This is organic price action. Price breaks through resistance, and then it goes back to that line to see, hey, is this line resistance or is it now support? And what did it do? It bounced. It said this is not resistance, this is support. Where do we go now? To the moon or further. But this 500-day time scale is very significant. Now Ripple's buying back XRP, millions off the secondary market as ODL gains global momentum. So ask yourself, why is Ripple buying XRP as ODL, the product that uses XRP, gains global momentum? Imagine a scenario where every bank is required to run ODL. And why would they require them? Banks will want to use ODL because it allows them to save money. And what are banks in the business of? Money. So why are they buying this back as it's gaining momentum? Obviously, because they need it for as it gains momentum. And what happened in the past year? ODL volume surged 9x, 900%, right? Amidst a lawsuit, you can't even buy on exchanges. It doesn't matter. XRP is not for retail. Ripple has been a buyer of XRP in the secondary market and expects to continue to undertake purchases at future market prices as ODL continues to gain global momentum. And guys, check this video out. This is really crazy stuff. I know what I'm saying might be crazy, might sound crazy, but listen to Gary Gensler at the end of this clip. Gary Gensler, chairman of the SEC, the guy suing Ripple. Listen to what he has to say.
So Chris, how do you plan on distributing Ripple? I know part of it is set aside for the founders, and then the rest is given out to basically encourage people to use Ripple, or?
Ripple Labs can give it to business development partners, to consumers broadly, to people globally. So two things that we've been doing which we like is we've been incenting market makers with XRP forgivable loans. It's essentially the vehicle that we're currently using. But we feel that incents, say, big currency traders, high frequency traders.
Big currency traders, high frequency traders. 50% of the trading on the markets, on the financial markets, more than half is done by things called HFTs, high frequency traders. These are algorithmic bots. These are robots. They can buy an asset before your order goes through and sell it back to you at a higher price. These are high frequency traders. They have direct internet connections to these exchanges, optic fiber, that you can't buy. Okay, these guys do trillions of dollars in movements, and this is who Chris Larsen, founder of Ripple, is talking about incentivizing to use this product.
To actually be active market makers on Ripple, say big currency traders, high frequency traders, that provides liquid markets. That's good for everybody. It's them an incentive in the long-term success of the network. That provides liquid markets. That's good for everybody. Gives them an incentive in the long-term success of the network. In some ways, just exactly what Visa did, is they sort of gave out ownership of Visa to key banks to participate in the system.
Did you hear that? They gave out ownership of Visa for banks to participate in the system. So imagine a scenario, history repeats itself. Ripple could give out ownership to banks to participate on the ledger and to save money. Banks are in the business of money. This saves them money. And now SEC Chairman Gary Gensler, listen to what this guy has to say here.
Central monopolist with another central monopolist. A lot of commercial banks aren't terribly excited about that. Maybe you're going to have to give some ownership. Maybe you'll have to give 50% of your ownership to the 20 banks.
Maybe you'll have to give 50% of your ownership to the 20 banks. Why would these banks want someone to come in, take their industry over, and then charge them money to use their products? These people run the world. These central banks, these large financial players, they're not just going to let you come in and take what's theirs. And this is not me saying this. This is Gary Gensler. This guy was an MIT professor. He knows about the blockchain. Now he's an SEC chairman. And he's proposing this scenario, not a loony on YouTube. Commercial banks, central monopolists, having to take a piece of Ripple for them to participate.
Excited about that. Maybe you're going to have to give some ownership. Maybe you'll have to give 50% of your ownership to the 20 banks that are now, part of this. I mean, there are other ways to build incentive systems. Maybe you put a native token in there, and you give them the native token. So there may be other incentive ways, monopolist.
In some ways, just what exactly.
If that doesn't excite you, I don't know what will. Hit the like button if you like that kind of news. I really do appreciate it, and it supports the video. And Chris Larson's statements were just as big. He's the founder of Ripple. He's talking about having the idea that they should do something like what Visa did. Visa, right? Not just any company. You have to give up some to participate in the system. It's pay to play. Okay. You guys are still watching. Comment Airbnb below. By watching more of the video supports the channel. So let yourselves be known if you're still watching and hear this. And guys, XRP can't be cheap. Okay. CTO David Schwartz says, if you need is the chief technology officer of Ripple, very smart guy. If you need $1 million worth of XRP to make payments, the market price will be 1 million. The price of XRP doesn't affect anything. However, higher prices means that the same size payments will move the market less. So a higher price makes the market less volatile. People sending money, do they want to do it with a volatile asset? No. So we need a higher price, take out some of that volatility, that risk. Then he says it can't be dirt cheap. That doesn't make any sense. If XRP costs $1, they need 1 million XRP, which would cost 1 million. If XRP costs $1 million, they need 1 XRP, which would cost, again, 1 million. All right, so this stuff can't be dirt cheap, guys. And now I want to talk about inflation, all right? Inflation's been going absolutely crazy. I'm going to leave you with this video, all right? Subscribe if you're new. Hit the bell next to the subscribe button. The inflation rate, they say, is 8%, and there's a lot more to the inflation rate than an average person would know. Very interesting stuff here.
Currently experiencing is nearly double what you're being told, and the people responsible do not want you to know why. Now, the latest CPI report for June 2022 showed that inflation rose 9.1% over the last 12 months, which was significantly higher than what was to be expected. But the thing is, inflation is almost certainly much higher than even that. But before we explain how, let me show you how the feds calculate inflation. The Bureau of Labor Statistics tracks the price of what they call a basket of goods and services, and this is intended to represent the average consumer patterns of an American. This creates what's called the Consumer Price Index, or CPI, and that's the figure we see in the news headlines whenever inflation is cited. But here's the problem. Originally, the CPI was meant to track the cost associated with keeping a person's current standard of living. And this was done by using a simple basket of goods approach to see how much you and your family were spending on things like groceries, housing, transportation, or even a family vacation. But starting in the 1980s, the Fed began to change the way it calculated inflation. And they did it by no longer measuring a constant basket of goods, but rather using what's known as substitution. And that is where things started to get sketchy. Because the whole point of identifying the effects of inflation is built around comparing the price of the same goods and services over time. But the feds allow for cheaper substitutes and alternatives in their calculation, then they're actually hiding the effects of inflation. And this has led to widespread allegations that the CPI numbers have been rigged for the last 40 years. Because as prices rise over time for certain goods faster than others, the federal government just assumes that people naturally switch to buying cheaper, poorer quality goods of the same type. What's more, the federal government updated the CPI calculations again in the 1990s, only to exacerbate this problem further. The result? Well, if we're using the same calculation standards of the 1980s, then the current inflation rate in the United States today is actually at a whopping 18%. And that's even higher than it was during the worst months of the inflation crisis of the late 1970s and early 1980s. But this begs the question, why did they change the metrics in the first place? Now, it would be easy to conclude that the reason is they want to hide their own culpability in the economic catastrophe that's being created. But the true reason might actually be a lot worse. The federal government changed the metrics because it makes it easier for them to protect their favorite mechanism for manipulating the economy. But now that almost everyone across the United States and indeed around the world knows that we are in an inflationary crisis like never before, the question is, just how bad can it really get? Well, imagine picking up a loaf of bread at your favorite grocery store and having the price change drastically between picking it up off the shelf and making it to the checkout line. It's happened before, and without a major course correction, it can happen again.